Okay, for this video, I wanted to cover the Washington, D.C. Earned Income Tax Credit. So we're all familiar with the Earned Income Tax Credit at the federal level, which is claimed on your 1040. But a lot of states throughout the U.S., including Washington, D.C. here, have their own version of the Earned Income Tax Credit. And so that's what I want to cover on this video and go through a sample resident return for someone who's living in Washington, D.C. So we've got our taxpayer here, John Q. Taxpayer. The first step is always to prepare your 1040 first. So the reason why we do this is because the Earned Income Tax Credit at the state level, including Washington, D.C., it's generally computed as a percentage of the federal amount. So here we have John Taxpayer. He's a single filer. He is not married and he does not have any children, right? So remember, you can get the Earned Income Tax Credit if you are single and have no qualifying children, so long as your income is below a certain threshold. So we have John here. His wages are $18,000 during the year. He's got some investment income, but given his earned income is below the relevant threshold for the year, he can qualify for the EITC. So if we go to the federal worksheet here, we have his $18,000 in earned income, and if we reference the EIC tables, based on that amount of earned income, his credit is going to be $521, right? So that's an individual with earned income at this income level with no qualifying children. So the $521 he claims on his federal return, line 27A, so there's the $521, and then he moves on to prepare his Washington, D.C. resident return. So the Washington credit it's computed one of two ways. So the first one, if you have qualifying children, it's generally just 40% of whatever the amount is. If you don't have qualifying children, your computation is a little different. So his amount of DC adjusted gross income, $18,014 there. His DC taxable income, we could see, is $54,064, and the tax is $219. So not too much tax owed in Washington, D.C., but now we have to move on to how he's computing his credit. So the credit computation is found on these lines here, lines 27 through 27E, and then there's a relevant worksheet. So we can see here that for filers with qualifying children, you enter the federal EIC amount and then multiply it by 40%. So if you have qualifying children, your credit computation is relatively easy, right? You are just multiplying the EIC by 40%, and that's the amount of the credit. If you don't have qualifying children, which is the case here, you have to complete the relevant worksheet to determine not only what the amount is, but whether or not you qualify for the Washington, D.C. earned income credit amount. So if we jump down to the worksheet here, okay, so it's a two-page worksheet. It covers sections A, B, and C, right? So we have District of Columbia EIC worksheet for filers without a qualifying child, okay? Remember, if you have qualifying children, your computation is done differently. So in this example, we have John with no qualifying children. So we have section C, B, and then A, right? So first you want to start with A, then go on to B, and then C. So section A covers your eligibility for this childless worker EITC, right? So remember, no qualifying children. So the worksheet is relatively straightforward. You're just answering yes or no questions on the way down to determine whether or not you qualify, right? So if you follow the instructions, so for example, if you answer no to this first question, you can't claim the EITC. If you answer yes, keep going. So you get through all the questions, question 3, right? If you answer yes to any of these, stop, you're not eligible for the EITC, so on and so forth. So if you answer all these questions appropriately and it's still determined that you are eligible for the EITC, move on to section B, okay? So section B, this is where we see more of the numbers. So firstly, you have to calculate your earned income, right? So enter the amount of wages, salaries, and tips from your 1040. He's got $18,000 there. Fill out any other line items that are applicable. In this case, John has a very simple return, right? He's just got his W-2 wage as a teacher and some investment income. So his total earned income is going to be $18,000. Now, section C, the last section here, figuring the amount of your credit, right? We have the earned income, $18,000. And then the worksheet notes here, right? If your earned income is less than 9817 multiplied by 0.153, Otherwise, enter $1,502. So 1502 is the maximum amount of credit that can be claimed. So this is the tentative amount of the credit. Now, once you have the tentative amount of the credit, you need to continue looking at these lines here to determine if there's any phase out. Okay, so if line 4, so that's the amount of the earned income here, right? If line 4 is less than $19,743, enter the amount from line 2, so $1,502. So what they're saying there is, look, your income is below this threshold, so it means you're going to get the maximum amount of the credit. If your income is above $19,743 and between this threshold, then you're going to have to compute a different amount. Right. So remember, the EITC, you get a full amount if you're below income, a certain income threshold. If you fall within a certain range, then there's a phase out. And then if you make too much money, in the eyes of what their regulations are, then the earned income credit is arguably or perhaps phased out completely. So in this case, John is below this threshold for DC tax purposes, so he's going to get the full $1,502 credit that's going to be reported on his return. So once he's got the 1502, his EITC for Washington, D.C. tax purposes, he can report that up here. First, so it will ultimately be on line 30, but first report on 27E, right? So for filers without qualifying children, 1,502, and that's the amount that's going to be refundable to him. So he's got 1,502 in total refundable credits. He had $500 of DC income tax withheld, and so when you combine the two amounts, the total payments and refundable credits that John is going to be eligible for is $2,002. Now, you can see here, line 38, the amount overpaid is $1,783, and that's because he did owe some tax for the year, right? If we scroll up here to his income computation, we have his DC income of $18,014. He got a DC deduction amount. That's effectively the standard deduction in Washington, D.C., and then his taxable income is $5,464, right? So the total tax on that amount of $5,464 is only $219. So he got his total amount of refundable credits and payments made 2002 minus that tax at $219, and so the amount he's going to get back, the amount that's overpaid, is going to be $1,783. All right, so it's quite a big chunk of money, right? So very, very important. The message with all of these is if you are a resident in a state, or in this case, a district that imposes a state or local income tax, make sure that when you're preparing your federal return and you're capturing all those credits at the federal level, you are also being diligent to capture all the credits at your state and local level, okay? So in this case, the amount of the earned income tax credit in Washington, D.C. was greater for John than it was at the federal level. And normally, that's not the case. Normally, the federal is going to be higher, and the state or local portion will be lower because it's just a percentage of that total amount. But in this case, he's getting a nice big check from Washington, D.C. Okay, so I hope that was helpful. If you have any questions, obviously, please leave me a comment below. I try to answer as many of those questions as I can, and I look forward to seeing you again on the next video. Thank you.